Anybody familiar with trading, even a beginner trader, you would have come across the candlestick. And everybody agrees that a candlestick is a great tool. I mean, the Japanese candlestick will not only tell you where price is, it will also tell you the open, it will show you the top of the range, show you the close, and every other thing in between, right? But now, the Japanese candlestick is a major flaw. Now, this might come as a surprise to many people who are chartists and candlestick pattern technical analysts. Like, for example, when you see the evening star, price, the bearish harami, price is supposed to trend downwards, or when you see evening star doji, that the price is also going to come downwards, and every other thing in between. But there's a fundamental problem with the candlestick, and here is the problem. The candlestick almost believes that two trading situations are the same. For example, when we have the Greystone Doji, meaning the price opened at a particular level, right? This level, price opened here. Price went up, and sellers were able to absorb all buying pressure, and price trended downwards, but eventually closed at a region so close to the open. Now, but simply because buyers were absorbed by sellers, this is a sell signal, right? Now, but this is particularly wrong, because in this situation, we're looking at almost just 50% of the story. Now, this is what I would say. Let's look at the footprint chart. The footprint chart. Now, the footprint chart is just like the candlestick, but there's a difference. We have the orders as they happen. Now, if you look at this portion, this is the bid, this is the ask. So at this portion, we could see that 156 contracts are being sold, while 213 buyers are in the market at this particular price point. Now, this is a more in-depth look into what is happening in a particular candlestick. So if I have a Greystone Doji, the fact the price opened where it closed and buyers were absorbed by sellers is half the information. I need to know just how many buyers are in the market. For example, looking at the previous Greystone Doji, if there were, say, 20 buyers and they were absorbed, and in another situation, I have, say, 100 buyers and they were absorbed by sellers. The good question you would ask is, are the both situations the same? The answer is no, because the more buyers that were present in the market and were absorbed shows us that the strength of the sellers are more in the second scenario than in the first. This information you cannot find in a candlestick. You cannot find by drawing Fibonacci's or by using moving averages, because these all are, for Fibonacci, we might say it's predictive, but it's not taking into account what the market is saying, right? Now, that's the first problem with the candlestick. The next problem with the candlestick is this. Okay, permit me slowing up a little bit. It should come up any moment now. Okay. Right. So now, this right here is the volume profile, or what we will call the market profile, right? Now, the market profile is a tool that shows us three pieces of information, right? Now, it shows us the price, yeah? The price, where it's particularly security, asset, wherever it's trading, it shows us the price. It also shows us the volume. That's the thickness of the profile. It shows us the volume. Now, the last piece of information, which is really, really, really vital, that the market profile, or market profile is not exactly volume profile, but they do almost basically the same thing. So it shows us the last thing, which is what time. Now, the higher time price spends at a region like this. Now, this is at this region. We call this region POC, right? This is a region where more time was spent. And if you look at what happened here, price opened at this region, went up, but spent more time in balance here, more time at the center. Price also went down. But what happened? Price found its way back to where it traded most. Now, we use an illustrative example here. Probably due to the COVID situation, prices of things went up and down, sideways, whatever. But what do you think is going to happen eventually? If we look at chart of, say, TV sets in the past 3 to 4 years, if before COVID-19, the balance price or the perceived price of a television set was, say, $400. And because of COVID-19 supply chain issues, price moved up to $600, $700. Where do you think price will go back when supply chain issues have been sorted out? You may guess it right. It will go back to what? The point of balance, or the point where price spent most of the time. So why the candlestick shows you patterns, it shows you what the market is saying. Do I say it does so at the macroscopic level? It is not showing you in-depthly what's happening in the market. Neither is it telling you what happens with respect to time. Because, for example, we might say weeks in a candlestick shows you the price went up, but it didn't stay there long, and the body of the candlestick, but it does not really show us how long price spent there, because price moving to a region and just spending a few minutes, it's way different from when price spent much of the day's time frame trading in a particular region. So in as much as you love the candlesticks, you love Fibonacci's, you love every other indicator, RSI, moving averages, and every other stochastic or oscillators, you should look into order flow, market profile, because I believe most serious traders look into these things because they show you exactly what the market is trying to do from the perspective of the market, because the market perspective can never be wrong. While indicators may lag, or those that lead may give awful predictions, this perspective from the market will definitely give you insight into what the market is trying to do. I cannot guarantee you that you'll be right 100% of the time, but it will increase your chances, because trading is just a game of probability, really, and your edge is what increases your probability. Your edge is your trading system. The better your edge, the better your probability of winning, the better your probability of being consistent, the better your probability of being a successful and profitable trader. So that's it, guys. My name is Victor. I'm a trader. I trade mostly Ethereum. I trade Bitcoin sometimes, but I'm mostly Ethereum trader with successful results. And please do well to like and follow this channel. Peace out, guys. Peace out.